YouTube. So I just wanted to hop on here real quick and show y'all this simple supply and demand strategy that I've been using for a couple weeks now. I learned it from Camellia on YouTube. Her YouTube is her trading, I believe her trading journal or something like that. But I've been using it for a couple weeks now. When I tell y'all it hit, it definitely hit. Like, I'm gonna break it down. I'm gonna show you when to enter, why you enter, when to get out, the confirmations you need to wait on, and all of that. So first, let's go to the 1 hour. I like to do my top down analysis before anything, and I start on the 4 hour. But I just want to show y'all gold. At first, I was against selling gold because look at this. We just been buying just higher highs, higher lows, higher highs, higher lows until we got to this high in the market. When it created a new high in the market. We got a dump. It made a higher low. We pushed back up to this high. We respected this level. Oh, excuse me. We respected this level. We did not go above this level. So we got another dump. And when it dropped this time, we broke this higher low and made a new low in the market, which signals and telling me that, okay, gold wants to sell off now. Now we want to look for sales in the market, because once we broke this higher time frame support here, and if you go to the 4 hour, it's the same exact thing. The 4 hour, you see the higher low, you see it's broken, you see that the support went straight through it. So now what I'm looking for, I dropped down to the 5 minute. I know my bias. I know that I'm looking for sales in the market. So once we broke that support here and we got this pullback and we came back under this level, and I'm going to show y'all how y'all could have capitalized off of this move as well. I don't like to counter trend trade. I like to trade with the trend. The trend is your friend, they always say. But I'm going to show y'all how y'all could have caught a couple of these moves as well. But now, let's get back to these sales. So once I saw the market come and break this higher time frame support, we came back, we retested it, and then we made this lower low. This low is lower than this low. Once I saw that, okay, now I'm going to draw up my supply zone. Your supply zone is the last bullish candle before the drop, before the impulsive move. So this last pink candle here is my supply zone. So I'll grab my rectangle and I'll just, the whole candle, you want to use the whole candle. And then boom, so like that. So once I saw that we broke this low, now I drew my box up. Now I'm just waiting for the market to pull back and retest this this zone. As long as we don't go above and we break, as long as we don't break this zone, we're good to sell it back to this low. So let me show y'all how that looks. I took my short position. You want to put your stop loss right above where the right above your supply zone. Supply is the sky. Your supply zone is above, and you want to target that previous low. And as you can see, TP was hit. It's a 1 to 2 RR, almost a 1 to 3. So that's a good move. Now it's just the same thing over and over again, y'all. So now you want to wait for this low to be broken. And we got that move. Now it broke it again here. This low is lower than this low. So what candle made this move happen? This bullish candle here. Let me mark it off for y'all. So on this one is this candle. On this one is this pink candle here. And now you want to mark it up with your supply box as well. I'm just putting it, highlighting it for y'all so y'all can see it. But you want to draw the box on the full candle and drag it out. Now, all you're doing, once the market taps back into it, you're waiting. I'm sorry, y'all. Once the market taps back into this supply, which it did here, hopefully y'all can see that. It did right here. I got in. This is where I got in for this sale here. We tapped into it. We did not go above it. Then I put my stop loss like, it was about here. But we did not go above this supply zone. And you get in for your sale. Your target would have been here. You're always targeting the previous low. But I knew it was going to continue to sell down. So I just stayed in it. And once I saw that we started getting a little bit of choppy right here, started getting some rejection, I went ahead and got out. But as you can see, it made a retracement. And where did it go? Right back to this supply zone. So I caught another move. On this move, I took my small account that I started with $11 on Monday. Now today, from this move, it's up 155. And on this one, I had got in using that same supply. I got in here. Oh, my bad. That's the wrong short. Got in here once I saw the rejection. Stop loss above that low, above this the previous candle over here, the wick. And then I targeted the previous low that was here. And as you can see, TP was hit again, 1 to 6. And I didn't hold it, I didn't take it, I didn't hold it for the whole trade. I got out about right here. Because I was satisfied with what I made on my other account, 536. And on this one, when it pulls back, you can add more positions. I had added another position here and just wrote it down. But that's it, y'all. And then, okay, so boom, we got another break right here. This low is lower than this low. The bodies of the candles closed below this low. So what candle started this impulsive move? Now, it can be, we can use this supply here, drag it across. And as you can see, it's respecting it. As long as we don't go above this, this supply zone, you're good to bring it back down to this level. But if it breaks, then the whole play is invalidated. But that's how I caught those. It's so simple. And if you using the 5 minute, stay on the 5 minute the whole time. When you marking up your supply and demands, when you taking the trades and entering the trades and all of that, stay on the 5 minute. If you're using it works on all time frames. But if you use the 15, same thing. Stay on the 15 minute the whole time that you're in that trade. Don't be switching from the 1 hour to the 5 minute to the 15 minute to the 4 hour. It works on the one time frame. Now, some of the moves that you could have caught over here is okay. So you see I have this trend line here because we had made a small resistance area. The market didn't want to push above, but once I saw this breakout right here, you could have took and drew your demand zone. What candle, last bearish candle that happened right before that impulsive move. Make it bigger so y'all can see. Which would have been this black candle here, right here. before the impulsive move. And what you do, you don't buy on that first break. You wait for it to pull back into that zone, and then you just enter a trade. Long position. Could have got in when it came back above here. Your target is that previous high. Your stop loss is right below that zone, and that's a 1 to 2, 1 to 2.5. Target hit. And it's the same thing over and over and over again. So we got another break here. This high is higher than this high. What candle made this impulsive move, made this market go up? Pretty much. Look, I'm trying to explain it as simple as I can. I got the wrong thing. Get your box. This last black candle here. Boom. Come down to the wick. Pull it across. Boom. Came up. We came back to the zone. We did not break it. We did not break below this zone. We respected it. So you get another long position. You enter once you see that first bullish candle. And you're targeting that previous high. Your stop loss. Good. It can be below that zone, but I probably would have put it just to have a tighter stop loss below that last low that it made over here, and another 1 to 2. And it's the same thing over and over. Now on this one, this is why you got to be patient and make sure you use your stop loss, because on this play here, we got to break a structure. We did create a new high, higher than this high. But now, if you would have used this, say your demand here, you could have made a little profit off of it, because you see we broke above, we came back to retest this zone, and we respected it for a while. You got a little bit of profit here, but as you can see, we got a drop. So that's why it's good to use your stop loss. Use a stop loss. Learn from my past mistakes. Use a stop loss. And then honestly, you could have, when the market came up, you in profit here, you could have took your profit here, or you could have placed your trade break even, took partials, or you could have protected this trade. It didn't have to be a loss at all. So yeah, that's pretty much how I look at the market when it comes to supply and demand. And I love it because you're in and out. Like, it's like every day like clockwork. I'm telling you. When I see an opportunity, when I see a setup, I get in, say this one was like maybe, how long was this trade? Like maybe 30 minutes or so. Like, you're not in the market all day long. You're not looking at your charts constantly and monitoring your trades. You're in and out the market, especially on this 5-minute time frame. So right now, I wouldn't take this. It's just playing around too much in here. I want to see a strong rejection and for it to continue falling. So I'm just sitting on my hands waiting to see what gold is going to do. It's going to show its hands. You just got to be patient and just stay disciplined. Don't just jump in and out the market because you see it's buying up. Now you want to get in for a buy because it could reject it and continue to fall down. But yeah, so that's supply and demand. Now, on the other strategy that I use for my higher time frames, which is what I learned from Sai, Trades by Sai on YouTube. Now, his strategy, ICC, indication, correction, continuation. Now, I'm going to break it down for you real quick. Real quick. Now, if you go on a higher time frame and you see that the market is not respecting certain levels, you see that we got this bearish move right here. The market is telling you, it's indicating that price wants to come down here. So you don't get in, you don't start selling on that first breakout. You wait for it to pull back, which is the correction. We came back, we got a correction. Got all these people out that was selling early, and then once it gets back below this level, you hop in for a sale and you bring it back down to this low here. So that's ICC, simple strategy as well. But yeah, I like both of them, but the supply and demand is just you in and out. Using the higher time frames, you will be in the market a little longer, maybe a couple hours to a couple days. Well, just waiting for it to play out. But that's it, man. I just wanted to show y'all the plays that I did take today, and just how simple supply and demand is, and how I'm using it, and how I learned to use it, when to get in, when to get out. It's just very simple. But I appreciate y'all for watching this video. Make sure you like and subscribe, and don't forget, trust your strategy, trust yourself, stay disciplined, don't give up. I'll see y'all at the top.